Stocks are charging higher here. Take a look at the S&P 500, NASDAQ, Dow Jones, Russell. Gold is off of its highs. Bitcoin rushed to 106,000 here this morning. Dollar index is rebounding and oil is also strong. Let's talk about why. So this morning we got the JOLTS job openings report, which showed some stronger than expected labor market statistics. We forecasted 7.11 million job openings. Instead, we got 7.39 million. And with NFP right around the corner and the last two reports coming in stronger than expected, will we get a 3 in a row strong labor market report this week? That's definitely the question this week coming up on NFP Friday. Fed's Bostic sees one rate cut in 2025, but tariffs could derail that. And this seems to be a persistent theme with Federal Reserve committee members. Basically, the idea is that while data is starting to suggest a rate cut could be acceptable, tariffs still have that big question mark attached to them where there could be a spike in inflation if those things don't kind of improve and peacefully resolve soon. But with some good labor data this morning, we do see the S&P 500 back to its fresh rally highs here, or just shy of them. And the S&P looks very confident here. It does look to me like we are likely headed back to that 6,100 all-time trading high for the S&P. The NASDAQ too, take a look at this rally. You're talking about one of the strongest bounces back I've seen in my trading career, up 32% in just about 2 months. That is absolutely crazy. And Fundstrat's Tom Lee thinks that this rally is set to continue, calling it the most hated V-shaped rally. And I've seen it in my own comment section. So many people think that this market is doomed to go right back down to the lows, and they're bitter that it has rallied so strongly since those lows. Why is that? Well, the elephant in the room is that obviously there's a lot of political divide in America and globally right now with what's happening with the Trump administration. But maybe even more reasons for such a visceral response to this market rally is the put to call ratio. Check this out. Back in April, during all of the panic mode, everybody sold their portfolio. Not obviously everybody, but many people got very spooked by what was happening in Washington and thought this is going to cause an impending recession, which, by the way, has not showed up yet. And in my opinion, there are no clear, obvious signals that a recession is coming. And before you say, well, that's what they always say right before one, well, I've been saying that for years now, and the economy still shows some very resilient metrics when we look at it. Obviously, you can always make a prediction and say the recession's coming, and eventually you will be right. But people who have been saying that for the last few years have missed out on some incredible opportunities in the markets. Take a look at the AAII Investor Sentiment Survey, still showing that most market participants that answered this survey, either bullish or bearish, are heavily still leaning bearish. This stock market rally is very, very under scrutiny by the majority of the investors responding to this survey. Almost 70% of respondents saying they're either neutral or bearish on this market. And just for context, this thing got absolutely the most bearish right at the market bottom. Same thing with the put to call ratio, which spiked out to its maximum point right before the market bottomed. So this is one of the many reasons why I think that this market can continue to push higher, as many people who were caught on the wrong side of this move now feel the need to chase this market. Otherwise, they will severely underperform their benchmarks. And I'm not talking about retail investors. I'm talking about institutional investors. Just take a look at the latest weekly COT buys and sells, and we can see institutional money is chasing full speed ahead this index rally. You can see big buys on the S&P 500. They added long contracts, they decreased short contracts. Take a look at the Dow Jones. They added long contracts here, removed short contracts. And the NASDAQ, they added longs, decreased shorts. So clearly institutional money flow, which is what we're tracking on the screen right now, is showing institutions feel they've missed the boat and don't want to miss the next wave higher. Now, is there a guarantee that the next wave higher is going to happen? No. But it seems institutions believe that there will be. I can't speak for institutions, obviously, but looking at their actions can tell us a lot. And just a quick plug for our VIP group. Right now, we are doing our biggest sale of the year where you can get access to every trade signal that I share with members. If that's something that you're interested in, you can explore the group and all of its details down below in the description. And if you send us a direct message using the first link in the description down below, you can speak to a member of my support team who can get you up to 45% off, an extra 5% off for subscribers watching my channel today. So click that first link, let my team know that you'd like to join the VIP membership, and they'll get you set up with access access to that so you can see all the trades, join our chat rooms, join the coaching webinars, read through our educational portal, and much, much more. If you're looking to take your trading to the next level, we're looking for more serious traders to join our VIP room, and I'd love to meet some of you guys. So make sure to click that first link in the description below. And a trade I'm personally in is the Russell 2000 index, which is performing really well here today, up 1.16% at the time of recording, and back up to test this level here that we saw some resistance from last week. You can see we spiked up into this area. Actually, this was a very sharp reaction, but I basically kept my trade on. I moved my stop just slightly below this swing low here, and basically I'm looking for this thing to break through those highs, and if we close decisively above, I'll take that as an opportunity to move this stop loss into profit. And this was a trade that I shared within our VIP group. You can see the US 2000 update that I just did recently, trimming my stop loss. With every trade, I share the full breakdown and context behind why I took the position. Now let's take a look at gold. You can see it's pulling back here a little bit today. For the most part, this thing has been, as I've been saying on my videos recently, very choppy, very back and forth, and doesn't seem very decisive in terms of a particular direction. However, to the credit of the bulls, we have seen a nice resistance from any kind of selling past this downward trend or upward trend line, and we've also seen support hold really well in recent times. From a pure price action perspective, I wouldn't be surprised to see this thing head back up and test this previous high around the 34.40, but I would be surprised to see a substantial break past that level unless we get some sort of major catalyst to accompany that move. For example, Russia kind of puts on the pressure again with Ukraine. China goes into Taiwan. The Middle East flares up again. One of those geopolitical tensions, or for example, complete shutdown of negotiations between the United States and China, something like that. That could get gold to really ramp higher. But in the meantime, barring everything the same, I just kind of expect price to range back and forth. JOLTS job openings coming out strong here today also may have had a little bit of a negative impact on the price of gold, as job security, the labor market looking okay, is not particularly bullish for gold, as gold thrives on chaos. However, the US dollar may have just tried to bounce off of this 98.5 area. You can see this level of support previously held very well and kicked off a couple weeks of upside move in the dollar index. Curious to see if we get a similar reaction here. Buyers clearly stepped in and bought the dip here today on the job openings. However, the trend here is still very largely to the downside for the dollar index, and I can't really justify being overly bullish until you get some decisive breakouts in combination with some stronger economic data. For example, if we get a very strong NFP and unemployment rate this week, those things could really buoy the dollar higher and maybe solidify this bottom. But it's hard to really call a bottom on this thing as it's been trending so decisively lower in the recent months. By the way, if you're interested in getting access to the EdgeFinder for free, here's a way you can do that. If you're outside of the United States, 8cap offers a way for non-US traders that trade with them to get access to the EdgeFinder completely for free. Here's how. If you head over to our website, a1trading.com/8cap, that's a1trading.com/8cap, spelled like you see it on the screen right now, then what you can do is you can explore the offer in its full entirety. Basically, if you make a certain deposit tier level, they will buy the EdgeFinder on your behalf from our team and give it to you. It is a relatively straightforward process, and like I said, the best way to explore that offer is head over to a1trading.com/8cap. Here's a look at the euro dollar, which is trading back and forth here recently. Also pretty range bound. A lot of these major currency pairs have been in recent times, except for the pound. The pound looks really strong here. We see higher than expected inflation recently out of the UK. In fact, let's look at our economic heat map. Taking a look at the UK economic heat map, we saw some really interesting stuff happen here. Manufacturing PMIs actually came in higher than expected, adding more fuel to the fire when it comes to the UK's outperformance relative to expectations in terms of their economic prints. Long story short, most of our metrics are suggesting bullishness for the British pound. CPI coming in at 3.5% may keep the Bank of England from cutting interest rates anytime soon, or at least doing so at a much slower pace. This makes the British pound on a relative basis a potentially more attractive currency than other places that may be cutting their interest rates much faster. For example, Europe, which is seeing inflation now below 2%. This morning we got 1.9% year-over-year inflation for the Eurozone. That's below the forecast of 2%, and in my opinion makes the euro look very, very weak in relation to the British pound. And shout out to Forex James, who also sees the same idea. He's an EdgeFinder user and a macro trader as well. Follow him on Twitter if you haven't already. Taking a look at Euro British Pound, comparing those two just like we just did, I'd be personally looking for a little bit more squeeze higher to potentially add a short position. If we can get that move, I will probably look for downside on this currency pair. Again, off of the basis comparing the two economic prints, I think the British Pound has a higher probability of staying strong in relation to the Euro. Oil's up again here today and now officially testing our key pivotal decision point spot. You can see this downward trend line coming into play once more. I'm very curious to see if price can actually break through this level. And if it can, I'm probably a buyer on weakness. Of course, any trades that I take will be shared inside of the VIP group. Don't miss that discount. Again, link in the description below. Today, I did a deep dive on Apple stock. And if you're a stock person and interested in exploring more about stocks, consider checking out my second channel. I'll leave it linked in the top right hand of the screen right now where you can find the video that I did specifically on Apple. Thanks for watching. We'll see you next time. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.